So this is Richard Harrisburg, and you are seeing my YouTube channel. And today we are going to solve the question from A2 accounting, and the topic is business purchase, where we are going to go for a realization account, capital accounts, and new prepare balance sheet, or we are not being asked to prepare the statement of financial position. Rather, we are going to prepare the journal entry for the new company, which is going to take over the business. So the company is going to take over the partnership business, which is between ADA and Brain. And this question has come in which variant? February, March 25, 22. No, sorry, February, March 25, 32. So it is the exam which happened just 1.5 months back. And the paper is with me. So I'm going to solve this question for you. Business purchase. Acha, this paper is rather an easy paper. एक सवाल कैश फ्लो का था, वो भी बहुत ज्यादा मुश्किल नहीं था. एक सवाल बिजनेस परचेज का था और एक क्वेश्चन उसने दिया था रेशियोज का. सो इट वाज नॉट ए डिफिकल्ट पेपर एक्चुअली. ठीक है. तो अब मैंने बताया था ना कि अब जो क्वेश्चन आएंगे आपके पेपर में वो गैस मैं डाल भी दूंगा. मैन्युफैक्चरिंग और कैश फ्लो, इनमें से स्केड्यूल ऑफ नॉन करंट एसेट्स. ठीक है जी. मैन्युफैक्चरिंग तो आएगा ही आएगा. स्केड्यूल ऑफ नॉन करंट एसेट और कैश फ्लो में से एक आएगा, विच आई विल गो फॉर schedule of non-current assets. And the third question is from business purchase, but it can come from profit and loss sharing arrangement also, which I have solved. It is already available in my playlist. So let's start doing this question. Ada and Brain have been in partnership for 30 years, sharing profit and losses in the ratio of 3:2. That is 3/5 and 2/5 respectively. They agreed to sell their business to W Limited on 1st January 2025. W Limited, which is a company, took over all the assets except cash and bank. You know that cash and bank is normally not taken over by the new company. Trade payables were fully settled by the partnership at 76,000. Remember that partnership business is making the payment to trade payables by themselves. So they are making the payment to trade payables by themselves, and the remaining assets and liabilities other than cash has been taken over by the W Limited. So the statement of financial position of the partnership business is given. Non-current asset, equipment, motor vehicle, current asset, inventory, trade receivable, cash and bank, capital and current accounts are given. Trade payables are given, which the partnership has paid for 76,000. The value of asset taken over by W Limited was agreed upon as here: equipment 174,000, motor vehicle, inventory, and trade receivable. These are the fair value of assets which has been taken over by W Limited, which will then be compared with the purchase consideration to find the goodwill. But here, goodwill is given in the question. Rather, we can calculate goodwill and then we can find the purchase consideration also. So the value of goodwill of the partnership was agreed at 3 times the average profit for the past 3 years. So the value of the goodwill of the partnership was agreed at 3 times the average profit for the past 3 years. So profits of the partnership business for the past 3 years were, that is given. The purchase consideration was fully satisfied by the issue of new ordinary share of W Limited at a value of 1.75. So it means 1 is the price per share, the face value, and 0.75 is the share premium. But shares were to be allotted to the partners according to their profit and loss sharing ratio. So it is distributed between the partners according to their profit and loss sharing ratio, which is 3:2, 3/5 and 2/5. W Limited had $5 million one ordinary share in issue. Why it has been given? That 50 lakh ordinary shares have already been issued by W Limited, but at a price of $1 per share. This statement has been given only to make you realize that the price per share, the face value of the share, the par value of the share, the nominal value of the share is $1. And then when we are issuing it at 1.75, so it is clear that 0.75 is the share premium. Even though it is not given, if nothing is given, we assume that the price per share is $1. So 0.75 is going to be the premium. So let's calculate. First of all, Fareed calculator aap nikal lijiyega. Let's calculate the average profit, which is the total profit for the last 3 years divided by 3. That is going to be the average profit. So 37,100 plus 41,300 plus 44,600 divided by 3 G. Kitna aata hai? That is going to be your average profit, and you have
41.
Sir, it is 41,000.
41,000. Okay.
It is
Multiplied by, because the formula to calculate goodwill is average profit multiplied by number of purchase. Okay, number of purchase or the times with which we are going to multiply this average profit. So that is the value of the goodwill of the partnership was agreed at 3 times. 3 times means multiply by 3 the average profit for the past 3 years. So average profit for the past 3 years is 41,000 into 3. So we will find the amount of the goodwill. That is 123,000.
3,000.
000.
So that is the amount of goodwill. So why I have asked you to join the class and come in this class, because of the reason which is right in front of you, because it relates to business purchase, and you have to join the class of on Monday also for the same paper for cash flow statement. So February, March 25, 32, Fareed is the variant. So it has come to me thanks to Sir Sajid Munir Saab, because he has given me the first instance. As usual, he used to give me in the past also. So let's move forward. The value of, so goodwill we have calculated, that's it. Now I will go for the calculation of purchase consideration. Sir, we will not find the calculation of goodwill. No, because goodwill we have already calculated. So there is no reason to calculate the goodwill, because we have calculated goodwill, which is the average profit of the last 3 years into 3. So we have to calculate the purchase consideration actually in this case. So purchase consideration is supposed to be paid. That is the fair value of assets, which is the calculation of goodwill actually, which we used to do the calculation of goodwill. We will do the stuff in the same manner. Here it is: equipment, motor vehicle, inventory, and trade receivable. So I will write here equipment, motor vehicle, inventory, and trade receivable. Let's talk about the amount: 174,000, 48, 89, 91. So let's write it down: 174,000, 48,000, then 89,000 and 91,000. 89,000 and 91,000. So I have no other choice to express my feeling right now, because it is important. Why? Because the lecture has been recorded also for you, and it will go to my YouTube channel. People will see, students will see. So I have to admit this, that I have asked in all the groups who have not been coming in the class, that this is important class, come in the class, and only Fareed has joined the class on my request, where he was not a part of the class. Even he was not a part of the class, but he joined it because he believed in his abilities and in his teacher's ability also. So that's why he finds out कि जी ये मुश्किल एक important सर पेपर करवा रहे हैं, तो ये जरूरी है. That's why he got 27 out of 30 in P1 and 83 out of 90 in P2. And Alhamdulillah, I am expecting the same type of marks from him in future also. So total of this assets, please calculate: equipment, motor vehicle, inventory, and trade receivable. What is the total? Cash.
40,000.
Can you repeat again?
Sir, 402,000. 402,000.
Okay, 402,000. Now, this is going to be the net assets. Sir, why? Sir, you didn't subtract trade payable from this. Very good question. Because trade payables has not been taken over by the new company. Why? Because it has been paid directly by the partnership business at a value of 76,000. But remember this: if any asset or any liability has not the examiner is silent regarding any asset or liability, that either it is settled by the partnership or it is taken over by the new company, and nothing is mentioned, we assume that that asset or liability is taken over by the हम assume करते हैं कि वो नई कंपनी ने जो भी वैल्यू फेयर वैल्यू बनती है उस पर टेक ओवर कर लिया. Now we will add goodwill in the net assets. That is 123,000. We will add net assets in the goodwill, and that is going to be your purchase consideration. Usually you will compare net assets with purchase consideration. Usually you compare net assets with purchase consideration to calculate goodwill. This is the same calculation, but here we are supposed to find the purchase consideration, not the goodwill, because goodwill we have already calculated by ourselves. So what is the amount? What is the amount? 5 lakh?
525,000.
525,000. Okay. Now this purchase consideration is settled by the issue of shares, and the shares is going to be of a price of 1.75. So what is the number of shares? If you divide it with 1.75, that is the
3 lakh.
3 lakh.
Yes, sir.
The share capital will be 3 lakh into 1. That is going to be 3 lakh. And share premium, it is going to be. Sir, why we are doing this? I told you that I used to go for the working first in every question of business purchase, because it makes it simple. Wherever we will find these amounts, wherever we will require these amounts, we'll write it. Though I can explain it to you that these amounts are required in the journal entry of the new company, and it is a requirement of the question. So what is the premium? 1 lakh
225.
Sorry, 2,25,000.
G.
Okay, so 5,25,000 is the amount, and these purchase consideration is basically settled by the issue of shares, which are divided between the partners in the profit and loss sharing ratio. Now, let's go for the question. I have gone for the calculations normally. Now, let me open the question paper. The question paper asks us, state three difference between goodwill and a tangible asset. Goodwill is a intangible non-current asset, okay, and it is cannot be touched. Whereas tangible assets is touched, can be seen. Goodwill cannot be seen, obviously, but tangible asset can be seen. Then goodwill has no exact monetary value. It is against the money measurement concept. Where tangible assets are recorded at its cost price, the price at which they are purchased for the first time, right? And the examples, if we just want to write it down, that is like goodwill is trademarks, copyrights. Well, these are the goodwill. And tangible assets, machinery, building, motor vehicle. Secondly, goodwill, inherent goodwill cannot be sold and cannot be recorded in the books of account. Inherent goodwill will not be recorded in the books of account. Only purchase goodwill will be recorded, while tangible assets, all tangible assets are recorded in the books of account as non-current assets. So these are all non-current assets, but these are intangible and tangible. So tangible purchase goodwill only will be recorded in the non-current asset section, whereas all tangible assets are recorded in the non-current asset section. And obviously, tangible assets are used for more than 1 year and they are not for resale purpose. Same is the case with purchase goodwill. Okay, it is a part of the non-current asset. And obviously, G, money management concept says that it should not be recorded in the books of account because it is against the money management concept and prudence concept also, because it is a future profit. But purchase goodwill used to be recorded in the books of account, because he just told us three difference between goodwill and tangible asset. That is the difference between in goodwill includes both internally generated goodwill and purchase goodwill. So we can write the statement which Fareed has quoted, that goodwill has no money value and it is against the two accounting concepts of money measurement and prudence, but that is internally generated goodwill. Purchase goodwill is recorded in the books of account. It is shown in the statement of financial position as purchase goodwill because it has a money value and it is being purchased. Calculate the purchase consideration payable by W Limited. We have already calculated that. Then you can write down the goodwill is basically created because of good years of trading, right? Because of morale of the employees, good location, good years of trading. I already discussed with you. Because of quality of your product. These are the reasons for the goodwill. The second, the amount you pay over and above the net assets of the business, that is goodwill. So tangible assets is included in the net assets. So over and above the amount you pay, that is going to be the purchase goodwill and recorded in the books of account. Calculate the capital account of Ad and Brain showing the final settlement of the partnership cash or bank. So before preparing the capital account, I have to go for the realization account. So let's prepare the realization account, which is going to be a simple one in the question. So I will go for the assets on the debit side, which we used to do. We have to transfer the assets. Equipment, sorry, 186,000. Motor vehicle, 55,000. Equipment, 186,000. Motor vehicle, 55,000. Then we have current assets 73, inventory 94,000, trade receivable 73,000, inventory 94,000, trade receivable, and trade payable is going to be how much? Will be transferred 77,000. So let me write it down also here. Equipment, then motor vehicle, then I am going to write the inventory, and then I'm going to write the trade receivable. We are making the payment to trade payable. The entry will be realization account debit, bank credit. So realization account debit because of bank, that we have trade payable directly by the partnership business on their own. Then any asset is taken over by the partner? No. Any other asset which has been paid by the partnership business or asset has been sold? No. So we'll go for the entry for the purchase consideration. The entry is W Limited is going to be debited because W Limited is our trade receivable. We have to take that amount, and realization account is going to be credited. Sorry. So 525,000 I will write on the credit side. And here I will write the W Limited. So now you are going total of the both sides, whatever amount is heavier. Yes, this is one of the easy questions, I believe. Yes, but you are finding it easy because you have already done the same way of solving the question, which generally doesn't happen. For example, entries, teachers don't teach entries properly. So the 7 marks question, which is last part of the question, will become difficult for the students. So please go for the total. Which side is heavier? Credit side, obviously, I think so. And these profit is going to be distributed between EDA and Brain in their profit and loss sharing ratio. So what is the total? Profit and loss sharing ratio between them is 3:2. So 3/5 and 2/5. So what is the total of the credit side? That is 602,000. Okay. The credit side total, and we'll subtract the debit side. We'll be having a profit on revaluation.
Total for debit is 484, but whereas but total 602 हमारा total है, तो sir the amount for realization is 118,000. अब इनकी profit sharing ratio I
3/5.
forgot. So,
3
sir
by 5.
profit sharing
जी जी.
दोनों sir तो
3/5 and 2/5. So 118,000 into 3/5.
20,800 A and
Sorry.
7080 800
74800.
70708.
Okay. And for B is 2/5.
It is 47,47200.
Okay. 47200 is the answer. Okay. Now we are supposed to prepare the capital accounts actually. So let's prepare the capital accounts for both the partners because that is the question actually. He has asked us to prepare the capital account, not the realization account, but we have to prepare the realization account. Always remember this because it will be easy to solve the question, and most probably we will not go for any mistake. We will prepare the realization account, and then we can post the entries in the capital account section. So let's see that what is the amount of capital given in the question. So the capital account amount given in the question is EDA and Brain 2 lakh and 1,50,000. So let me write it down, brought down here. 2 lakh and 1,50,000. Now I am going to write the realization profit. It will be credited 70800 and 47,200. Then I will transfer the current account because we are going to close the business. So current account is going to be transferred to the capital account. ADA has 10,000 negative, Brain has 5,000 positive. So because of 10,000 negative, it will come on the debit side of ADA capital account. And for Brain, this is 5,000 positive. It will come on the credit side of Brain capital account. You can pass the entry also, like here, ADA capital account debit and ADA current account credit. This is the entry. Over here, ADA Brain current account debit and Brain capital account credit. And this is how we have posed the entry in the account. So let's see any other thing which is given in this question for the settlement of the, okay, nothing is mentioned. So let's go for the shares. So ordinary share we are issuing to both of them and they are distributed 5,25,000. We are going to make the payment for the ordinary shares and they are distributed according to profit loss sharing ratio between the two partners, like 5,25,000 into 3 by 5 and 5,25,000 into 2 by 5. देखिए बेटा, share capital and share premium will shown separately, but in balance sheet, in the entry, in the new company statement of financial position, it is not required over here because we just need to distribute the shares between them according to their ratio. So that will be the simple way of by dividing the amount in the profit and loss sharing ratio. 3,15,000 and
210,000.
okay, 2,10,000, right? So I will write here 3,15,000 and 2,10,000. Okay, now I will go for the total of the credit side. If you just see, I believe that total of the debit side is heavier regarding ADA because the difference is going to be close with the name bank account. Because whatever the amount is supposed to be, either we'll receive the amount from ADA or Brain or we'll make the payment, pay the amount to ADA and Brain. So the total will be 3,25,000 of the debit side is heavier for ADA. I will write here also 3,25,000 and here I'm going to write the bank. What is the amount of the bank? 3,25,000 minus 2,70,800. Yes. What is the bank figure? This also looks more than.
Sir, for A, the
2,10,000. Debit side of Brain is also high.
sir, for A, the bank figure is
This
54
I'll calculate by myself also. That is 2,10,000.
200
Sorry, 325.
on the 54200 for A.
Ji, 54,200 and for the other person that is, so let's see next part of the question. So we were going to solve now. We were going to solve now the next part of the question, that is prepare the journal entry of W Limited to record the acquisition of the partnership business. Only 2 marks. The journal entry you have to pass to record the acquisition of the partnership business. And next part is basically the negotiations. So let's see. The journal entry we will pass is that the assets are being taken over in the W Limited, books of W Limited. You can write here, books of W Limited. Yes, this is 7,800 now. Bank will be closed. The capital accounts are prepared. So the entry will take from the calculation of goodwill or calculation of purchase consideration. You can use both names. Equipment debit. Now the equipment is our equipment. Motor vehicle debit. Equipment inventory and equipment and motor vehicle is now the assets of the W Limited. Inventory, then trade receivables. Right? So let me go for the total of this. 174,000, 48,000. Inventory is 89,000 and trade receivable is 91,000. And goodwill will also be debited because now goodwill is going to be an intangible asset of the W Limited because it is a purchase goodwill. And credit is going to be the ADA and Brain. ADA and Brain is going to be credited because we have to make the payment to them for an amount of 525,000. If you just look at this, it will become 525,000 in total, including including the goodwill. Next entry is going to be that ADA and Brain is going to be debited with 525,000, and we are making the payment through share capital, then share premium, and that's it, I think so. The whole amount is paid by the share through share capital and share premium. Okay, share capital. That's why I have calculated the amount of share capital and share premium. Remember, that's why. So 3 lakh is going to be the share capital, and 2,25,000 is going to be the share premium. So this is a general entry. If you will be asked to prepare the statement of financial position, you can prepare that also. Sir, how come? You can add in the statement of financial position of W Limited, already given in the question, which is not given in this question. Equipment will be added with this amount. In the equipment of W Limited, motor vehicle will be added, inventory, trade receivable, and goodwill will also be shown in the intangible assets as a non-current asset. Then 50 lakh shares are already there of W Limited. 3 lakh shares will be added into this, right? And 2,25,000 will be added in the share premium. So this is how we are done with the statement of financial position also, but it has been asked to prepare the entry. I believe that maybe the statement of financial position will be required this time in the exam. So let's see that how the things will move. Any problem till here, you can ask me. This is rather an easy question. And I believe that this paper was also not that difficult. It's a comfortable paper. And for paper 3, I believe the grade threshold will be around 50 for this paper. It is not yet announced actually, because the paper has been examined in the last month, February, March 25, 2032. In negotiating the terms of the sale of the business, ADA and Brain initially requested that goodwill be valued at 5 times the average profit of the last 3 years, but W Limited only offered 2 times. They finally reached an agreement of 3 times, explained why W Limited did not accept the initial request for 5 times the average profit. Support your answer with relevant calculation. So if you just look at the question, 5 times the average profit was 41,000 of the last 3 years into 5. How much the amount is going to be? That will be around 2 lakh
205,000.
Yeah, where currently the goodwill will be at that time goodwill will be 2,05,000, and currently the goodwill is going to be 1,23,000. So the problem is this. Yes, Fareed, you are right. We don't have that much amount of profit even available. So how the goodwill has been created? Because goodwill is basically created through profits, through good years of trading. So if you just look at the question, the W Limited will basically ask them that we are already paying you because of the purchase of your business. We are paying more than the value of net assets of the business because of the reason of because we want to make the payment for the goodwill. We want to go for the purchase of the business, but the average profit for 24, 23, and 22 is around 40,000. And if you multiply the 3 times, it becomes 2,05,000, which is a very heavy amount. So they didn't agree that 5 times 41,000, 2,05,000 should not be the value of the goodwill, because even the assets taken over is 4,02,000. So net assets are 4,02,000. So 50%, almost more than 50%, is the 50% of that is goodwill. That is not a fair deal, because goodwill, there should be some part of sense of the goodwill, that whatever profit you have generated, or the location, the quality of the product, or whatever, it is the amount over and above the W Limited will pay over and above the net asset of the business, which becomes the purchase goodwill of the business. So they will not agree to that, because the calculation also shows that that amount is very high, because 2 lakh is going to be a very big amount, because the whole purchase consideration is 5,25,000 currently out of 4,02,000. So if we'll pay, the amount of the shares will also be high. They have to issue more shares, and the premium on shares will also be on the higher side. because already they are going for a premium of 0.75 per share, and it might not be able to issue that much amount of shares to them, which has been agreed. So they don't have that much amount of cash also. It is also a possibility. So they didn't agree to the proposal. So let me see if there is another point on 1st January. Okay, there is nothing mentioned about the whatever the business they are doing. Otherwise, I would have discussed about the business, that what business kind of business they were doing. Okay. So let's move back to the question. So calculate the capital account, calculate the purchase consideration. Then we have gone for the entry, 2 marks entry only. In negotiating the terms of the sale of business, I've discussed with that. And then initially they have requested for 5 times, but generally if you just sue, you can also cite there isn't methods of calculating goodwill, average profit method, super profit method, capitalization method. So they will not agree to 5 times because they were not ready to make that much bigger amount for the goodwill, because it depends upon the negotiation that how much goodwill is supposed to be paid. Calculation, they were asking that what amount will be become 5 times. So that is 2,05,000, and only offered 2 times. W Limited previously offered 2 times, and then they were decided to go for 123,000. If we go on for 2 times, that becomes 82,000. Then we would have paid 82,000 as the amount of goodwill. That is almost, you can say, almost 20% of the net assets. So let's move forward. No, that is not the right answer. Next is to satisfy the purchase consideration. Ada and Bain were offered 2 options by W Limited. Fully satisfied by the ordinary share of W Limited, fully satisfied by cash. Evaluate whether or not Ada and Bain made the right decision to choose option 1. Justify your answer. So option 1 is that they will be fully satisfied by the offer 2 options. Either take it by cash, or they should be fully satisfied by the ordinary share issue. They were of the, because if they will purchase shares of the company, their liability will be limited to the shares, to the extent of shares held by them. Then they are going to be a large scale business. The market share will increase of their business. Competition will go down. Maybe the dividend they will be paid dividend. Maybe they will be paid dividend. They will get more dividend rather than the whatever the profit they are getting out of it. And if fully satisfied by cash, they can take 5,25,000 cash also, dividing between the 2 partners. But as a part of the company, now their position and the company has a more legal status. It has a common seal and a perpetual succession. And in the future, might be future is more bright, and their stake in the business will definitely reduce. Yes, their own property will not be part of the if the business is going to have a